Trump certainly took markets and perhaps even himself by surprise in November, and we saw markets react as such. So rates sold off, equities rallied, break-evens widened, and the dollar strengthened again. So the markets are romancing and still romancing this kind of pro-growth scenario for Trump. When we look now at our forecasts for 2017, I think the key question from our clients, Joachim, is, does the Trump administration fundamentally change our outlook for growth and inflation in the year ahead?
Well, Olivia, we're pretty much unchanged, at least over our cyclical horizon, which is the next 6 to 12 months. And the main reason is that most of the fiscal stimulus, if we get a big fiscal stimulus here in the US, will only hit the economy in late 2017 or 2018. And in the meantime, I think the stronger dollar and higher rates, which we have been seeing already, will dampen animal spirits. So if we look at our forecasts on the next slide, we have global growth pretty much unchanged in a range of 2.5% to 3%. That's pretty much the range that has held over the last 5 years. We think nominal GDP growth will increase, but that's mainly because inflation in the developed market economies is bouncing back. So Trump really doesn't change our cyclical outlook. What has changed, however, is that we think the tails of the distribution have become fatter. So there is now a right tail that is maybe more probable and a left tail outcome that has also become more probable.
Mervyn King at our Secular Forum in 2016 brought this to us, the idea of radical uncertainty. It sounds pretty daunting as it pertains to forecasting. So how do we approach forecasting in a radically uncertain world?
Well, I think in a radically uncertain world, it would really be foolish to rely only on one baseline forecast. So basically what we've done for this forum is we have constructed 3 different forecasts, 3 scenarios in much detail. So a baseline forecast, obviously, and then a bull case and a bear case. And we decided to have 3 main drivers for these scenarios. So there are really 3 drivers. The first one is the transition from monetary to fiscal policy, which had already been going on for quite some time, but it may get accelerated by the potential fiscal boost that we may get in the US. So that's the first transition. The second tricky transition is the one from globalization to deglobalization, which may also get accelerated if Trump turns into a protectionist and if he does some of the things like import tariffs that he talked about during his campaign. And then there's a third key transition, which you also see on the slide, which is China's currency regime transition. China has had a dollar peg. They are now currently pegging toward a basket of currencies, and we think they are transitioning gradually towards something like a managed float or even a freely floating system. And the question is, how much currency depreciation will we see over the next 6 to 12 months in China? And so different assumptions on how these 3 transitions play out factor into our 3 different scenarios.